Bitcoin's long-term value thesis has never been better, has never been stronger, and its price has never been more discounted relative to that value.
It takes us a while to realise that what we're actually acquiring here is not an Aussie asset, it's a global asset.
If you're consistent in your application and your acquisition of Bitcoin, it gives you more runway. It gives you a longer time to enjoy your retirement. It shortens the time to retirement as well.
I like to refer to it as a monetary protocol rather than an asset. But I think that anybody who's got a time horizon of 5 years and beyond has benefit from Bitcoin's long-term promises, which are essentially wealth acceleration and wealth protection.
This is why people are opting into Bitcoin and why they've said, okay, if I've worked for my money and I've now deposited with a bank and they're telling me what I can and can't do with it, it's not my money. I've got a high conviction probability that Bitcoin will trade between $1 to $2 million within the next 5 to 10 years, right? What I don't know is the pathway between point A, which is today's price, and point B, which is my future expected value. They can take your oil, they can take your land, they can take your president, but they can't take your Bitcoin because they don't have the keys.
Today I'm excited to welcome back to the show Bisher from Stormrake. Stormrake is the fastest growing Bitcoin brokerage in Australia, and Bisher is at the helm. He runs a very busy trading desk. He has conversations with Aussies from all walks of life every single day, he and his team, people who are choosing Bitcoin as a way to opt out, to park their economic energy, to store their savings, their capital, their superannuation. So I want to have a conversation with Bish today around some of the psychology. Why is it that more and more Aussies than ever before are choosing Bitcoin as a solution, as a place to park their capital? I also want to get into Bisher's outlook for 2026. There's a lot going on around the world, financially, geopolitically, economically. And I know Bisher is a very, very knowledgeable guy in this area. So I want to get Bisher's outlook for 2026, what this means for you in terms of your acquisitions into Bitcoin. Is now a good time to be stacking harder, to be starting your Bitcoin journey? If you're just a newbie and you're looking to get started, is now a good time to be doubling down on your education? So I'd love to get your take on that, Bish, as well, and also the medium to long-term outlook, where you see Bitcoin being in, say, 2030. There's a lot of talk around where we're going to be in 5 years from now. And then perhaps some of the services you guys offer and why I often refer to you guys as the most frictionless way in this country for people to onboard into Bitcoin because of the service that you guys provide. So a lot to unpack today, mate. I really appreciate you coming back for the start of a brand new year. I wanted to get you on nice and early in 2026. Thanks for being here, buddy. How's the start to the year been for you?
Excellent. I've really enjoyed the start of 2026, particularly because I got to finally meet you in the flesh and we weren't having a video call or another phone call. We got to sit down, have a couple of beers and welcome in 2026 together. So already off to a flying start, and we're opening up our doors to America now. So we've got US people, US citizens and residents coming on and trialing our brokering service, which is excellent. So no complaints from my end. And plus I've got a baby due in about 4 weeks time. And I know you've welcomed in your grandson, which is huge. So there's life and new beginnings and new business opportunities. So it's all excellent here. So thanks, Zane. It's great.
Yeah, it was certainly great to meet you, Bish, in person and to chew the fat for a few hours and have a couple of beers. And it was most enjoyable up here on the Gold Coast. But what I'd love to know, Bish, is really what things are going on in the world right now that you're seeing that you think might impact the outlook for Bitcoin in 2026. There's quite a bit happening geopolitically, this whole conversation around the US and seizing the oil in Venezuela and what this could all mean. And what's your take on where things are at right now? And should people be concerned or confident and buoyed by what's going on? Should they be sort of leaning into Bitcoin a little bit harder right now, or should they just be sitting back and letting things unfold? What's your take on this?
Absolutely. Well, we're dealing with a number of geopolitical and financial cliffs in front of us. So for example, financially speaking, or from a macro lens, we've got the US government, which holds about $38.5 trillion in national debt. It is an incredibly indebted nation. Now, I can get into the reason why they've potentially made a move on Venezuela and why they're trying to push for their oil. But really, the big story that I believe is just a headline, which we can unpack. The big story is that in the first quarter, within the next 3 months, the US government has to refinance $7 trillion worth of debt that they took out during the COVID era, which was when the rates were close to zero. So imagine you locked in a mortgage for a few years on a fixed interest rate and you did it during the COVID days and it was close to zero. You're paying a couple of percentage points for your mortgage and you move off fixed and now you're onto variable. You're moving on to the current market rates, which have gone up astronomically since then. You're going to feel the pinch. Now, you'd feel the pinch on just one home, which might be worth $1 million, 1.5 million. Imagine being in $38 trillion worth of debt and you have to refinance 7 trillion of it within this quarter. So that's why there's going to be a big push on lower interest rates coming out of the Federal Reserve. That will lead the market to sell off bonds, drop the rates as much as possible because there's going to be an unbelievable amount of currency printing going on in the first 6 months of this year. This isn't me just being like a Bitcoin moon boy saying that we're going to go up and to the right because of currency printing. They actually have to systematically print a boatload of currency in order to buy up as many bonds as possible and drive rates as low as possible and slash interest rates as much as possible. Part of the reason why they want to push for the Venezuelan oil fields, which a lot of people bandy about the number of 310 billion barrels of oil, which is true in terms of reserves, but is going to require billions of dollars worth of investment to get that oil out of the ground and refine it to a stage which then could be shipped and used in vehicles and planes and whatnot. So it does take a considerable investment, but that's actually a good thing because they're chasing what is known as GDP growth or running the economy hot, which is that your GDP outgrows your inflation rate. So if you, for example, have inflation of 5%, but your GDP growth is 7%, then your real growth is 2. So they're chasing that hot economic growth fueled by currency printing and then being able to offset any potential inflation concerns by keeping energy costs low. Because one of the biggest drivers of inflation is energy. When the Russia-Ukraine conflict kicked off in 2021, oil went and spiked up to $144 per barrel of oil. Energy inflation went through the roof. Therefore, inflation across the world just spiraled out of control. So whilst the major point of inflation and the cause of it is currency printing, energy prices have a big part of it as well. And again, they manipulate the inflation numbers a lot. There's substitutes, there's alternatives, they can take things in, take things out as to suit their needs. But the big ones is energy and housing. That's why you've also seen some policy coming out over the last few days by President Donald Trump saying that he's going to ban massive institutional investors such as Blackstone from being able to buy up single family dwellings because they want to get property prices under control. They're also wanting to increase their defense spending from $1 trillion to $1.5 trillion, which is a massive increase. You're going to print out a deficit spending of $500 billion. So you have all of this going on geopolitically and from a macroeconomic perspective that's causing these massive inflation pressures and as well as currency printing. They're going to try to offset as much of that as possible by doing two things, which is growing GDP hotter than the inflation rate, and two, keeping energy prices low through the development of the Venezuelan oil fields. So when you combine all of that together, you're going to have ultra low interest rates because the US government needs to refinance its debt at more sustainable levels. They're going to continue to print currency out of thin air to grow their military defense spending, and they're going to run the economy incredibly hot and, invest a lot in AI and oil fields and data centers and all of these other applications to then be able to shore up the future of the US petrodollar. When you combine all of these things together, it's an absolute boon for Bitcoin. So whilst Bitcoin's price action is not being reflected of this incredibly accommodative environment, when the fundamentals are here and the technicals are here, and let's say the geopolitical environment and the macro environment is incredibly accommodative for our favorite asset class, go Bitcoin, and the price is down or suppressed or manipulated to the downside, whatever you want to kind of put it towards for this underperformance, there is going to be a massive catch up when that reality hits the ground. When people wake up and realize, oh my days, they're going to be printing $500 billion out of thin air just to increase the defense spending. They need to drive interest rates to zero in order to have a more accommodative refinancing environment. They're going to grow the economy red hot by seizing other people's assets and then investing in American big oil companies to develop their refineries and their ability to get that oil out to the American people. So for me, whilst there are a lot of uncertainties in this environment, I don't know what the next move is going to be. I don't claim to be a geopolitical analyst. I just see some of the actions and understand why they would be making them. But my perspective is that Bitcoin in this environment will thrive, but there will be short-term volatility. So over the long term, Bitcoin 200, 250K in 12 to 18 months is in play for me personally, and that's what we're seeing on the trading floor. But there could be short-term volatility that takes us into the 80 to 70K pocket, just in case there could be something like Iran-US conflict that kicks off. There could be the US tariffs could potentially be deemed illegal by the US Supreme Court, which would cause a lot of uncertainty in markets. So there are some headwinds, but I believe that would be more short-term noise rather than a consistent environment that we have to be concerned about. So for me, it's just an incredibly interesting time to be an investor in Bitcoin because you've got all of this going on and price is just not catching up. And I think that your knowledge and what you're sharing with your audience saying is fantastic because you're actually focusing on the value and focusing on what Bitcoin actually is and what you can do with it and how you can use it in your life rather than trying to chase hype and stories and narratives.
If you're ready to become truly self-sovereign, join my Bitcoin Success Circle. This is my private mentorship community. And inside the circle, you'll get one-on-one coaching from me, access to our 6 modules of recorded training, and you'll be connected with our growing community of like-minded Bitcoiners. This is a really powerful place to be. And everybody who's joined the circle is absolutely delighted that they did. Now, when you join us inside the circle, you'll gain immediate access to our membership portal. And inside the portal, you'll find our 6 modules of recorded training. The first 3 modules I co-host with Mr. Bisher Khudeira. He is COO, Chief Operating Officer at Stormrake. Second half of the training, I co-host that with Mr. Tony Yazbek. He is founder of the Bitcoin Way. So all of this is inside the program. I know you're absolutely going to love it and get tremendous value from it. With that said, I'd love for you to join me. You won't regret it, and I'll see you inside the circle. Yeah, no, thanks for that outlook and backdrop, Bish, because I think for most of us, and I'm definitely in this group, you know, we come into Bitcoin and it takes us a while to realize that what we're actually acquiring here or storing our value in is not an Aussie asset, it's a global asset, right? And when you understand that, you begin to realize that it's kind of incumbent on us to a point not to get bogged down too much with all of this geopolitical stuff because it's stuff that we can't really control, but certainly to just have an ear to the ground and a bit of an understanding of what's going on globally, geopolitically, economically, what's going on with the economic superpower of the world known as the US and some of the strategic moves that they're making, because ultimately that is going to have a significant spin-off effect to the value of our Bitcoin stack. Would you agree with that?
Correct, because if you can be conservative and consistent with your application of your Bitcoin acquisitions, and it depends on the type of account or the type of strategy you're deploying. If you're going to be using it in your self-managed super fund and it's just buy and hold for the next 10, 15, 20 years, set up your Stormrake account, buy your Bitcoin, put it on cold storage, check back on it in 20 years' time, and then buy your yacht and live in the Mediterranean. Happy days. But in terms of if you are doing it in a personal account or a family trust account, or you just want to you want to increase your Bitcoin stack in general, you might want to be a bit more timely with your purchases and be able to pick up more sats, because I'm a big fan of Bitcoin and I want more Bitcoin. So if I can just be aware of and cognizant of what's going on around me in the world, then I can make better decisions as to when I can deploy my capital and acquire as much BTC as I possibly can, and then not be too concerned about what happens when the price drops. Because for me, I'm a constant acquisition buyer of Bitcoin. Our company here at Stormrake, and something we shared when we were having a few beers, is that we've been accumulating Bitcoin for the last 4 or 5 years and putting it on our balance sheet. We don't call ourselves a Bitcoin treasury company. We're a full service broker, but the Bitcoin that sits on our balance sheet gives us, at least at current market prices, 6 years of run rate. So even if we don't make a single dollar for the next 6 years, we can continue to operate the business if our expenses stay the same, which is an incredibly assuring position to be in as a business owner. You can apply that to your own business. You can apply that to your own retirement savings. So whilst it's good to be aware of what's going on around the scenes to that way be more timely and increase your Bitcoin stack, it's about consistency. So if you're consistent in your application and your acquisition of Bitcoin, it gives you more runway. It gives you a longer time to enjoy your retirement. It shortens the time to retirement as well. And it also allows you to give, if you are a business owner and an entrepreneur and you put Bitcoin on your balance sheet, not to transform yourself into a treasury company, because if you're selling and you're a bakery and you're selling pies and cakes, you don't need to chase that next thing. You don't need to chase becoming a Bitcoin treasury company. What you focus on is you add that asset to your balance sheet, and it just gives you more longevity as a business. And that's what I love about this asset class, is that we are positioning our investors in something that they can hold for the next 5, 10, 15, 20 years. That also gives their business more runway. It reduces the amount of time that they have to chase towards retirement. So why not just figure out how to get more of it?
Yeah, I love that. And I'm a big fan of ending the month with more Satoshis, with more sats than you started the month with. And I think that's just a simple strategic mindset that anybody can have at any level to just get into this asset. I like to refer to it as a monetary protocol rather than an asset for lots of different reasons, which we'll get into. But I think that, anybody who's got a time horizon of 5 years and beyond, I think the simple way, if you just want to quieten the noise and just benefit from Bitcoin's long-term promises, which are essentially wealth acceleration and wealth protection, then, you've really just got to put your head down, quieten the noise, stick to your game plan, and just month after month, no matter what the price, no matter what's going on in the world, just realize that Bitcoin just does its thing. Tick-tock, next block, every 10 minutes, it just continues to tick away in the background, kind of agnostic to whatever's going on in this noisy world that we're in. And it kind of just gives us that reassurance that the stability of Bitcoin as an asset, the fact that it's decentralized, it's never been hacked, nobody can co-opt it. For me, that's a very comforting place to store my long-term savings and retirement funding and all those kinds of things. Bish, what I'd love to ask you is, and I want to talk about some of the strategies that you're kind of recommending to your clients these days when it comes to getting started in Bitcoin and maybe rotating capital out of traditional assets into Bitcoin. But what are you seeing on the front lines right now in terms of sentiment, volume? Are you finding that more and more new clients are coming on board wanting to start their Bitcoin journey, or you've found that people have been maybe a little bit put off by the underperformance of 2025? Everybody thought 2025 was going to see the Bitcoin going to the moon, but it didn't quite happen. Where's the state of play right now? What are you seeing in your conversations with people?
Yeah, I think after the initial, shock and awe of October and November, where, the first week of October in 2025, we put up a new all-time high. We ran from 114 up to $126,000 in the first week, which was awesome to see. Then there was that $20 billion liquidation cascade that occurred on the 10th of October. These types of events don't happen very often. It was the largest one that we had seen in Bitcoin and crypto's history. And so it takes time to build up that market structure again, confidence, liquidity, market depth. So the initial sentiment in October, November was one that was quite full of fear. There was a lot of concern as to what the contagion is going to be. How long is this knock-on effect going to take? Are we going to break lower? Are we going to revisit the previous all-time high, which was the 70K mark? What we ended up happening is we put up a low at around 80,000 US dollars. We've now normalized and we're trading in the low 90s, between 90 and 92K currently. So a lot of that fear has now turned into cautious optimism. So we've got a lot of people coming to us right now with self-managed super funds and family trusts that they've established in order to acquire long-term Bitcoin holdings. So whilst the general population has definitely lost interest and has moved on to, say, other asset classes which have got more bells and whistles and they're chasing the momentum trade, wherever that may be, that's okay. What we're seeing is a lot of people who have had long-term conviction get really excited. And there was one of my guys who I hadn't spoken to since 2023, bought a parcel from me at 40 grand, and I haven't heard from him in ages. Make an effort to reach out every now and again, but running a business, you don't get to make as many calls as you used to when you were a younger and a smaller brokerage outfit. He called me at around the 80, 82K pocket, and he goes, last time I spoke to you 2 years ago, you put me in a Bitcoin at 40. It's doubled since then. Obviously, we were at a lot higher at 126, but he goes, it's doubled in 2 years. I've made 50%. What I'd like to do is I'm keen on buying some more. And that's what I love about this, is that there'll be guys who I haven't spoken to in a couple of years who, of their own volition, come back to me and buy some more Bitcoin. Because at the end of the day, when you really step back and take stock of what has happened, 2023 we were trading at 40,000. At the end of 2025, we were trading at 80, 85,000, and everybody was feeling like the sky had fallen down, right? In
Mm.
no other asset can you deliver people a 50% compound average annual growth rate over a 2-year stretch and have them despondent about the recent pullback and correction that comes with it. So the attention economy, and I call it the TikTok brain, has really killed a lot of people's aspirations, but I'm really impressed with the over 45-year-old group and the over 55-year-old cohort, because they haven't been infected with TikTok brain, so they can have a bit more of a longer term horizon and have some longer term thinking as to what they're doing. So yeah, the initial sentiment in October, November was a lot of fear, but the volume was quite high because there was buying and selling and swapping and everything. December kind of normalized. We had a 3% range in Bitcoin for almost all of December. There was no meaningful moves in that month. So people got bored or were getting ready for their Christmas breaks and New Year's. And at Stormrake, we said to our clients that we won't call you unless you call us over the Christmas period, right? Because we didn't want people to expect to hear from us on Christmas Day, tell them to buy some more Bitcoin. It's time for friends and family and loved ones and good food and lots of drink and, get to church and all that kind of good stuff. So for us, it's been a really interesting 3 months because we've seen quite a range of emotions. At the start of October, people were max bullish, greedy, aggressive. People were trading with leverage like no tomorrow. We don't offer leverage and we discourage people from chasing it, but people can do what they wish. And then we had seen max fear in November shortly afterwards. And then we kind of saw boredom and lack of interest in December. And now January 2026 provides us a clean slate to build up a much better yearly candle. And we kind of explained from an economic and financial and geopolitical backdrop why that could be potentially quite positive for us. But yeah, it's been quite a roller coaster of emotions. I spend most of my time as a broker not really selling Bitcoin, but telling people to calm down a little bit when they want to put their life savings in at 120,000 and then wanting to then sell it all at 80 grand. I'm like, let's just have a strategy to kind of get you through it and not be too fearful and not too greedy. Somewhere in the middle is the right place to be.
So maybe we should change the name of Stormrake from the brokerage house to the psychology house or the psychiatrist.
It is a bit of a madhouse over here, so that wouldn't be out of place.
The funny thing is, and I kind of harp on about this quite a lot, Bish, and I know you know this. I've created my own mentorship community, and a lot of people have joined that over the past 9 months because, for a couple of reasons. One is Bitcoin is kind of a difficult thing to do on your own. It's a transitionary asset where we're transitioning into a new store of value system and potentially a peer-to-peer economy and all those things, but it's so new, it's such a paradigm shift. And there are so many people I meet with, and it's just maybe a husband and wife, but it's just the wife or it's just the husband and have a session with me. And it's like, oh, I'd love my wife to be on board, or I'd love my husband to be on board. And I'm kind of doing this on my own. I'm the one listening to all the content and getting myself educated on what this is. And then eventually, generally speaking, the other party comes around. But the point is that so much of all of this comes down to psychology, doesn't it? Because if you look at Bitcoin's fundamentals and what it's actually designed to do as a finite asset, as I guess the first time in history that we've ever had a monetary instrument that is absolutely scarce with a hard cap of 21 million. And I think that alone is one of the hallmarks of Bitcoin that a lot of people forget, right? Well, it's not that they forget, they might sort of know it, but then they kind of lose sight of it and they don't realize that when they're actually acquiring some Bitcoin or even fractions of Bitcoin, they're actually buying into this monetary protocol upon which all of this amazing technology is going to be built. So kind of like if we were able to buy a piece of the internet back in the day, in the late 90s, and then on top of the internet, what did we have? We had the Amazons and the Facebooks and the Googles and all of these amazing things. And we all came along like sheep, regardless of whether we believed in e-commerce and the internet and all of that back then, we eventually came this way. And so if you were a pioneer back then and your spouse didn't want to know about email, they were too busy, happy sending faxes and all of that, right? I kind of feel like we're in that same place now where people are just going it alone. They're kind of pioneering this movement and they can see the future and they're leaning into this, but it's against the backdrop of challenges in their personal life, right? Because their spouse or their best friends aren't on board. They think they're a lunatic, and challenges against the broader system, which doesn't want to know about it either. The media is not your friend. The politicians are not your friend. The financial planning industry is not your friend. The banks are certainly not your friend. And so you're having to pioneer and forge your way forward. And this is why I love what you guys do, because you kind of, I guess, are in a position where you're able to onboard people in a really comforting way at the coalface, at that critical moment where they're about to make an acquisition, where they're about to take their capital from the traditional legacy system and transfer it into this life raft, into this opt-out solution, which is Bitcoin. And so I love the fact, and this is why, me and my family, we switched everything over to Stormrake. I keep referring people to you because I get nothing but phenomenal feedback from you guys for the simple reason that people are feeling clear and confident, everything from setting up an account to funding their account, buying the Bitcoin, and then withdrawing the Bitcoin to their own cold storage wallets. It's just, you guys just make it so seamless. And so I guess my message to all of you guys listening to this is that you don't have to go it alone in Bitcoin, right? If your spouse or your mother or your brother or your best friend doesn't believe in what you're doing, just reach out to Bish or reach out to me or connect with a community or, tune into more Bitcoin podcasts or anything that is going to help you level up your knowledge in this sphere. But yeah, it's really interesting, isn't it, Bish, just to have these conversations with people to understand kind of why they're coming in this direction. What would you say are some of the problems that Aussies are feeling and seeing in the traditional system, whether it be in their super or with their bank or the financial planning industry or with their shares or even with their houses and their real estate? Like, are you seeing like a common thread with Aussies? Yeah.
100%. Like the biggest thing that we need to unpack is the fact that when you deposit funds into a commercial bank account, ANZ, CBA, Westpac, NAB, you become an unsecured creditor with that bank. The problem there is that they can then decide how you can spend, where you can spend, when you can spend, why you can spend, who you can transfer to, who you can't transfer to. It's all permissioned. So you've worked for those funds. You might be a laborer, you might be working in an office, you might be an accountant, a lawyer, a brickie, a sparky, it doesn't matter. You've worked for those dollars, you've paid your taxes, it sits in a bank account, and now you can't do with it as you please. I call it the Stormrake test. I say, go to your bank and try to withdraw $10,000 in cash from your local bank branch, right? That's if you can get an appointment, and that's if you can find a local bank branch within 20 kilometers, because they're closing them down like no tomorrow. And you're dealing with all online applications, and you're dealing with chatbots, both AI and also people overseas. So they don't care for you, and then they take your funds that you've been taxed through on the night, taxed through your absolute nose on, and then on top of that, they tell you and have the audacity as to how and where you can spend your funds. We see it ourselves. We oftentimes have people who attempt to make a transfer to Stormrake for the services we provide to convert their fiat currency to Bitcoin, and then they get denied, and then they say, crypto's a scam or Bitcoin's a scam, and Stormrake, you don't know them. They're going to take your money, and they levy all these accusations, which is outrageous because we're an Austrac registered, a Melbourne domiciled brokerage firm that anybody can come in and interact with and engage with. And it's quite crazy that, the banks are telling customers of theirs who they can and can't do business with. This is why people are opting into Bitcoin, and why they've said, okay, if I've worked for my money and I've now deposited with a bank and they're telling me what I can and can't do with it, it's not my money. So whereas if you have a Bitcoin wallet, whether it's a hot wallet on your phone or a cold wallet of any description, you've taken custody of your Bitcoin. Nobody on God's green earth can tell you no. It's a permissionless asset. You can do with it as you please. You can borrow against it. You can spend it. You can send it in the millions. You can receive it in the millions. Just to give you an idea, Zane, I had one of my clients who's had 30 Bitcoin with us, 30 Bitcoin with us, had it in our cold storage for the last 10 months because they were really trepidatious and concerned as to how they were going to self-custody their Bitcoin. 30 BTC at market value at the moment is a couple of $1 million. They were quite concerned as to how they're going to actually get through keeping it safe. And so they were like, okay, I'm going to learn. And when I'm ready, I'll ask for you to transfer the assets. We transferred them a couple of dollars worth of Bitcoin to confirm that they've received it. Then a phone call to confirm that they're ready to receive the balance of the same wallet. 30 Bitcoin, which was approximately $3 million, was received into her wallet, no problems like that. No permission required.
Mm.
We finalized the transfer to make sure it's all safe. She is now the full custodian of her life savings, and she can do with it whatever she pleases. Now, of course, with that comes a great deal of responsibility. You must keep your private keys safe and secure. You must keep it offline. You need to have contingency practices, recovery practices. So there's obviously ways that you can do that responsibly. But the key point here is that a lot of people are leaving the banks and moving into Bitcoin purely to be able to partake in self-custody of their own assets, and two, not have to be exposed to the inflation monster that we were talking about before. You're investing your life savings in a scarce, finite asset. So that's the number one cohort that we're seeing. The second biggest cohort, which you've been a specialist in, and what I love about working with you, is seeing people who are rolling over from industry super funds into self-managed super funds and buying Bitcoin, and then far outperforming their industry super fund by a factor of 3, 4, 5x outperformance over the last 3, 4, 5, 2 years, and not having to pay exorbitant fees for the privilege of doing so. It's just literally sitting in their cold storage at home, and they've been able to outperform it. So that's the second largest cohort. Our third largest cohort are Australian real estate investors. We're not talking about people who might be having a primary residence that they own outright and have no lien on or no mortgage against, but there could be people who have got their second, third, fourth investment property in Victoria. Council rates and land taxes have gone up a factor of 400% over the last few years. And so people are just hemorrhaging cash on assets that are barely keeping up with inflation. So we're seeing a lot of people selling investment property portfolios and moving into Bitcoin and then moving into cold storage. So those are the big three. People who are fed up with the banks and the banks telling them what they can and can't do with their funds. Two, people who are sick to death with the underperformance of their super fund against inflation. And number three, people who are getting absolutely killed in taxes and rates holding investment properties and then moving that into Bitcoin where they don't have to worry about tenants and, agents and property managers and, light bulbs and glass and all that kind of stuff that breaks and, things that go bump in the night, and then they lose they might have spent or earned 8 grand in rental income, but then there's a, leaky pipe and they're spending $5,000 to fix it. So people are fed up
Mm,
with that, and they're moving straight into Bitcoin on that basis, still keeping their primary residence if they wish. But
yeah.
those are the big three for me.
Mm. Well, you've just put to rest a bit of a smart aleck I had on my channel today, who posted a remark to the words to the effect of, where he said, "Nobody is selling real estate to buy Bitcoin. Nobody." So you just put that to rest. And I was thinking to myself, I meet with people every single week who come to me, people who are in real estate, developers, real estate agents who are very successful, people who have vast rental property portfolios. And they're telling me exactly what you just said, Bish. They can see that real estate is a problematic asset class. It is a maxed out asset. It is a sitting duck asset that is just being taxed up the wazoo, right? You can't move it. There's nothing you can do. Rates are going through the roof, maintenance, insurance, you name it. And so, there are people, for the listener, there are people who are actively divesting their real estate and parking their capital in Bitcoin because they're seeing it as a superior store of value. You only need to go back and look at the performance of Bitcoin over the past, 3 years, 5 years, 10 years, and you start to see the reality of that. This is not speculation. It's not like us just trying to pump up Bitcoin's tires, is it, Bish? I mean, this is just a reality of Bitcoin's performance, and it really is a byproduct of Bitcoin's absolute scarcity. And so, when people sort of say these things around, real estate is the apex asset, it has been that. And I've always been a great believer in real estate and have invested heavily in real estate myself. But I just believe, as do many others, that we're entering a new era now, where we're starting to see a lot of the pitfalls of real estate. And I would argue that the biggest beneficiaries of Aussie real estate have been the baby boomers, over the past 40, 50 years. And there's a really good chance that the next generation coming through are not going to benefit from real estate the same way that real estate has been monetized since the early 70s. Would you agree with that, Bish? I just wanted to touch on real estate a bit and push on that point a little further here, because I know this is a big one for people. Give
Yeah,
us
I
your
mean,
thoughts on that.
well, real estate is no longer a housing market, unfortunately. It's an investment tool that
Mm,
people, will work really hard to build up a deposit and then go out and sink the deposit to get a lot of leverage, because if you borrow against the property, yes, you're having to pay interest and yes, you're having to pay a mortgage, but your property value and the cash value that you're repaying every month, your property value
mm,
goes up and your cash value is going down. So you'd much rather have the asset that you've borrowed against going up in value and your Aussie dollar inflating away into oblivion, because at least at that point you've got the asset, right? And so what has happened with real estate over the last 50 years in Australia, Canada, America, the UK, most of the developed world, is that there's been a huge monetary premium ascribed to residential real estate. It's moved away from being a housing market. So what's the actual property value based off the amount of land you have and based on the quality of the build, the lumber, the tools, all that kind of stuff, that probably makes up 10 to 20% of the purchase price of the property, right? So let's say the average Australian home, the median Australian home price is $1 million, right? It would be a
which is
hundred to two,
ridiculous.
which is insane, because 100 to two
Mm,
hundred thousand dollars could be a fair argument to say that's the real value of the land and of the, especially if you're dealing with like a, 400, 500 square meter average residence. We're not talking about
yeah,
like
yeah.
a palatial Point Piper home on the water.
Mm-mm.
So you get that, and it might be worth 100 to 200 grand, right? But the remaining, 800 to $900,000 of value is your buying monetary premium, which is that everybody needs to find a way to store wealth safely and securely and not have it squandered. So by policy and by design, The Australian government has been pushing people into Australian real estate for the last 50 years. Even our beloved esteemed ruler Albo has come out with the 5% deposit initiative and 2% for single parents, which is quite reckless because then you're giving 95% loan to value ratio mortgages to people who otherwise wouldn't be
Are
able to afford
vulnerable.
it, are vulnerable and couldn't afford it. So there is a big push on a policy perspective to be able to drive people into real estate because it's heavily taxable as well.
Mm.
But ultimately, it's being used as a savings account. So to hazard a guess, 80 to 90% of most people's property transactions, the value of it is because people want a time-tested savings account. And that's what real estate has been turned into. It's no longer a housing market. You're no longer paying for the land value and the cost of the build
Utility.
that's
Yeah.
on top of the utility. You're paying for the monetary premium. And that's where Bitcoin really steps in. Bitcoin can go towards being a $10 million asset per Bitcoin, and we're trading at 90,000 at the moment. We can get to $1 million within the next 5 to 8 years. It doesn't price anyone out of having a roof over their head. It's why, precious metals historically have been the stores of value and means of exchange, is because whilst gold and silver can rip to the upside, it doesn't mean it prices somebody out from being able to have something to eat, and it doesn't price somebody out from being able to have somewhere to live. So we can have a viable housing market, which is not to say that we become a bunch of communists and that kumbaya and everybody has a home but we could genuinely make housing affordable if we weren't using houses as investments and using houses as savings accounts. Let's have a
Mm.
housing market. Let's buy the land value and property value, for what
And
it's
it's real
worth
value.
at
Yeah.
its real value. Just like, for example, you wouldn't, buy tomatoes or potatoes or bananas or any other consumable or something that you need for your sustenance and for your living at massively inflated premiums just because somebody wanted to put their life
Yeah.
savings in bananas, for example. We're not going to
Mm.
do that, right? So it's far better to use a non-tangible, which is what Bitcoin is as a digital asset, way to be able to store our assets, but not have to have concern around double spend and inflation and somebody running away with our assets. And that's the beauty of what the Bitcoin network and what the Bitcoin white paper solved, was that how do we have a permissionless decentralized asset where we don't have to worry about it being spent twice. We don't have to worry about my Bitcoin that I've worked hard to acquire or to purchase or to mine is not going to somehow, skedaddle out of my wallet without my signature. So that all got solved in the Bitcoin white paper. And then we can have this massive monetary premium, all the global monetary premium, particularly real estate and debt monetization, will end up in Bitcoin. And that's not going to happen overnight. This is a 10, 15, 20, 30, 40, 50-year
Transition.
transition. But the upside is monumental. So whilst there is a lot of high volatility, and there's no doubt about that, you are handsomely rewarded for that volatility with the reward that you get from it. But we're witnessing the birth of a new monetary standard. These transitions and these repricings are not a walk in the park. It's not like you buy Bitcoin at 90,000, go to sleep, wake up, Bitcoin's now at $1 million, right? It takes time. Bitcoin went from $1 to $10 to 100 to 1,000 to 10,000, 100,000. The next 10x is going to take it less time than it took it to get to 100,000. It took nearly 15 years from Bitcoin to go from zero to $100,000. Now that's a monumental percentage return over that period of time. But a 10x move sending us from 100 grand to $1 million might only take us less than a decade. And that's to be conservative. And that's what I love about this, is that real estate is no longer a housing market. It's an investment market, and it's got a ton of monetary premium. Thanks to guys like yourself who have switched on and can see the writing on the wall, which is monetary premium will move from housing into Bitcoin. The housing market or global real estate market is $380 trillion globally. Imagine just 10% of that coming into Bitcoin. Just 10%. We're not talking about the entire real estate market coming into Bitcoin. Let's just say of that 90 to 80% monetary premium, let's say 10% of that monetary premium comes into Bitcoin. That takes Bitcoin to a $38 trillion market. We're $2 trillion now. that prices it at 1.5 million per Bitcoin. Now, will it happen in a straight line? Of course not. That transition takes a considerable amount of time, but I'm confident that it will occur because we're seeing more and more people transition from using houses as savings and using houses to live in, as they've been designed to do, and using Bitcoin as savings, which is fantastic.
Yeah. Now that's a great summary, Bish. And just to kind of push on that point one little step further there, I think in a nutshell, what we need to understand, and I think a really great way of kind of framing this when we think about the history of housing and how housing has turned into a casino and into an investment rather than just a place to live, is the reality that back in the 50s and 60s and even the very early 70s, most people could buy a house on one income because a median priced home in Australia was 2 to 3 times the average annual wage back then. And that's why families could kind of lay their roots down and, dad could go to work, mum could stay home, they could raise a couple of kids, and mum would be there, when the kids got home from school with some scones and cream and or a couple of donuts and a couple of sandwiches or whatever. And, life was very different then. Whereas if you look at it now, as it relates to housing and the implication of this housing crisis that we've got and this runaway house prices and the impact that's had on society and the ability for people to create stability in their life and the impact on the family unit and all of that, it is really tied to this broken money system that has seen real estate overly monetized over the past 50 years. And so to the point now where, one income's not enough, 2 incomes is generally not enough. You probably need, one of your grown-up kids to stay home with you as well to help service the mortgage or to rent out a room to an international student to help fund the mortgage or whatever. And that's not how life is meant to be. And this is really the issue of the fact that housing now is not what it was designed to be. Maslow's hierarchy of needs, humans need shelter. It's just a basic human need.
Yeah.
And yet it's turned into this casino, it's turned into this speculative, this crazy asset class where people, really don't care. I was talking to one of my best mates the other day and he just said to me, I said, "Oh, you've just spent all this money on this house. It's done a magnificent job. You guys look really settled now." And he just said to me, he said, "Mate, I don't even think of it as home. I just think of it as a way to create more wealth." And this is where we are now.
Yeah.
And I think what you're saying, Bish, is that, Bitcoin is a solution. And as more people begin to realize that this is the next next opportunity, right? As Bitcoin does what it's designed to do, and that is to start absorbing that financial premium out of the some $900 trillion worth of global assets when you take into account stocks, bonds, real estate, gold, silver, fine art, collectibles, the whole gamut. We're going to see more and more of that premium being absorbed into Bitcoin. What did you say, you think that Bitcoin is going to become, say, within the next 10 years? Like what portion of that pie, of that global asset pie, do you think Bitcoin's going to absorb? You have any numbers on that?
Yeah. So right now, in terms of a percentage of how much of global wealth is in Bitcoin, it's approximately 0.2%,
Yeah,
right?
yeah.
It's infinitesimally small. So when people say, "Oh, well, Bitcoin seems expensive at, $90,000, I can promise you the amount of market share it has against stocks, bonds, real estate, all the things that you just mentioned and more, 0.2% of the global asset selection market. We could realistically grow to 2% within the next 5 to 8 years. And that would price us at approximately $1 million per coin. And that's my honest assessment as to where we're going to end up. Now, if we go and exceed that, and let's assume that, the 10% analogy, where 10% of the global real estate premium gets ascribed towards Bitcoin and we become a $38 trillion market, then we're on our way to being a $2 million asset. So the level of scale of growth here just boggles the mind. And it's still to this day, after 16 years of being around and having now been in the hearts and minds of millions of investors across the globe, it's still a really early and asymmetric opportunity that people can invest in. But it takes time. Like the reason why I want to focus on the time aspect is one of the breakout stories of 2025 was the move in silver. Now, precious metals, I'm a big advocate for sound money, and precious metals fall under that category as well. In a physical capacity, it has certain constraints, but it also has certain appeals as a physical asset. It went from around $30 at the start of the year and finished as high as $85. It had gone up about 150%, an astonishing move to say the least. It took 14 years, nearly a decade and a half for silver to put up a new all-time high. But for anybody who was stacking consistently in that 14-year period has now been handsomely rewarded with the price of silver catching up to its real value, which is well and truly north of $100. So it takes time, though. It takes time for the rest of the market, or in this case, there was a lot of manipulation going on in the silver market, which we're starting to see them try the same textbook with Bitcoin. We'll unpack order book manipulation and suppression in maybe in another episode. But in terms of what we're seeing here is that suppression and that manipulation broke in a really big way, and it went from $50 to $80 in a heartbeat. But it took 14 years to form that breakout. Unfortunately, most Bitcoin investors, I'm not saying all, don't have the patience and the tolerance for a 14-year sideways chop and lack of performance to then appreciate the gain, because we've been spoiled. Honestly, Zane, we have been absolutely spoiled as Bitcoin investors. We're greeted with a new all-time high on average every 2 to 3 years. How lucky are we? Right? That's pretty awesome. So but we don't have to wait a decade and a half, just a couple of short years, and we get to experience a new all-time high. We've become quite spoiled. So for me, it's about just focusing on Bitcoin's long-term value thesis has never been better, has never been stronger, and its price has never been more discounted relative to that value. So if I can buy Bitcoin today at 90,000, 80,000, 70,000, 100,000, I'm in a good stead to 10x my wealth over the next 5 to 10 years. And this is where I want to help people understand that I know what today's price is. As a broker, I'm hyper cognizant of today's price because I buy and sell on behalf of my clients in the millions of dollars every single day. So I'm very much aware of today's price, and I have high conviction, not a guarantee, but I've got a high conviction probability that Bitcoin will trade between $1 to $2 million within the next 5 to 10 years, right? What I don't know is the pathway between point A, which is today's price, and point B, which is my future expected value. We could go like any million of different scenarios could occur between those 2 points. It's like a river delta. You know where the start of the river is, and then as you get closer to the ocean, all of these deltas and tributaries and estuaries just span out as it just pours into the ocean. And so for me, that's what I want to focus on, is that the pathway could go, 100K, 200, 300, then correct down to 150 and be there for 6 months, then run back up to 400, correct to 200. I genuinely don't know what the actual swings are going to be that far in advance. We can model. This is when you do any sort of modeling and doing any sort of statistical analysis, the further away you go from today's price, the less accurate your results are going to be. And the more scenarios and simulations you're going to have to factor in. So for me, it's like, okay, let us deal in today's reality, which is people are starved for a proper savings account. People need a way to be able to store their value right now and a way to send value without having to ask for permission. Bitcoin solves that. Then we have future expected value as adoption grows and more monetary premium gets ascribed to Bitcoin. There's a capital growth play as well. But even if you don't get any capital growth from Bitcoin, now I'm not what I'm saying, but if let's say you don't get any capital growth from Bitcoin, which happened in 2025, we went down 6% for the year. You could still use Bitcoin and the network as intended, regardless of price. That's what people need to understand. That's why Venezuela, which is speculated to have close to 600,000 Bitcoins in holdings, was converting gold and selling oil for Bitcoin or for USDT and then converting that USDT for Bitcoin because they were heavily sanctioned. And again, I'm not making any political commentary here. You can be right wing, left wing, for, against what happened. I'm not commenting on that. What I'm talking about is the economics of their rationale and their decision making, which is They wanted an asset that could not be taken from them, that could not be seized from them, that cannot be stolen from them, right? That they can't be sanctioned with. Bitcoin is for everyone. Now, it could be for, a person who's wanting to retire or heading into retirement. It could be for somebody who has their self-managed super fund. It could be for me and you when I cover us a few rounds of beers at the surf club, and then you pay me back in Bitcoin right then and there. It's for everyone. It's for billionaires, millionaires, people who run nation states. And that's where the long-term value is going to ascribe and accrue to Bitcoin, is that people would much rather sell their resources and their assets, particularly if you're in a developing nation, for things like Bitcoin, because then you can't be sanctioned, you can't be stolen from, you can't be repatriated, to be able to have your president stolen in the middle of the night, and then your nation's resources is now under the stewardship and guardian of a much larger, powerful military force. It can be quite disheartening. Now, putting aside the political commentary that's for other people to unpack, you can't seize Bitcoin in the dead of night. Now, whether the private keys are a part of the plea deal or, sharing over that 600,000 Bitcoin to become part of the strategic Bitcoin reserve to unlock, there's some sort of US Venezuelan alliance. I don't know. I'm not going to be speculating on that. But the point of it is, even in a military takeover, where your president gets taken and your oil resources have been nationalized and seized by the United States, still can't take your Bitcoin because they don't have the keys. So that is the ultimate example of why Bitcoin wins and succeeds. Putting aside all of the political commentary, I'll let everybody in the comments section try to unpack that one. But it's about the fact that your Bitcoin cannot be seized and taken from you unless you voluntarily disclose those private keys and share them. So they can take your oil, they can take your land, they can take your president, but they can't take your Bitcoin.
Yeah, I love that. And, even coming from, somebody who profits, I guess, Stormrake, out of trading, people
Yeah.
buying and selling Bitcoin. And here you are really pounding the table and letting people know that one of the key features of Bitcoin is this sovereignty side of it, the ability to actually securitize your own wealth in a way that we've never seen before. And this is one of the things that I spend a lot of time talking about, Bish. So essentially, just to put an end cap on that before we just spend the next few minutes, Bish, before we wrap up, I want to just talk about some of the ways that you're making life easy for people getting into Bitcoin in terms of the services you offer. Really, I think in a nutshell, what Bish was saying there is that trying to time the market with Bitcoin is kind of a futile exercise, because even somebody like Bish, who runs a trading desk and is paying attention to the charts minute by minute, day by day, it's difficult. I mean, even you don't know what Bitcoin's price is going to be tomorrow, the next day, and the next year. And so really the message in this, and this has been, I guess, a timeless wealth creation principle, so there's nothing new here, but just something for everybody to think about, is that if you want to create wealth, it's all about time in the market, not timing the market. Time in the market always usurps trying to time the market, because even the best investors on earth, the best traders, the Paul Tudor Joneses and the Stanley Druckenmillers, and they'll tell you, you've just got to have time in the market and sit back and just let time do the heavy lifting for you, because it has a way of smoothing out that volatility. And I think one of the challenges with Bitcoin, Bish, is the fact that we have access to a 24/7, 365 price chart.
Yeah,
And
I know.
people have apps on their phone, and they're sitting there having a cup of coffee, and they're tuning into their app and they're looking at the price of Bitcoin, and they go, shit, I'm up, I'm down, I'm up. And imagine if you had that on your family home, right? I mean, you'd freak out, right? Because,
Yeah.
so we've just got to put this into perspective. And I know that, Bish, like you said at the outset, you spend a lot of time just, massaging people's consciousness around this so that they can make informed decisions, but also rational decisions, and not try to time the market, because it's such a difficult thing to do, and just to zoom out and look at where this is ultimately going. What I'd love to know, Bish, is just, and as particularly for the viewers and the listeners here, I'd love to know kind of how you guys work things at the coalface. What makes your service tick? Why is it You get so many 5-star reviews from people who are either getting started in Bitcoin, or maybe they've had a bad experience with an exchange or another platform, and now they've found you, and it's like all of their Christmases have come at once. What is it? What is it about what you guys do that's kind of so unique in the landscape?
It's just an old world personalized service. So in a world where it's overrun with AI chatbots and support tickets and, drop your feedback here or do this survey and, lodge a ticket and we'll get back to you, in an environment where that's just what people have come to know and expect. When you can just pick up the phone and say, yeah, g'day mate, how was your New Year's? All right, I'm keen on buying a couple of Bitcoins. What should I be doing? Dollar cost average, limit orders, market orders. Can you help me out? Or, I'm having trouble with my bank sending you funds. What should I do next? We help them through that process. Hey, mate, I'm trying to make a withdrawal. Do you mind giving me a test? Yeah, no worries. That's standard. We'll go put a couple of dollars in. Just give us a ring when you receive it and we'll get the full balance sent across. So that's really what has allowed us to set ourselves apart. The coalface is that people get to have a personalized service. That's number one. And then the commercial reality is, as nice as we are, people won't actually do business with us if we're not competitive. So people find that when they come to us, as opposed to your standard Aussie retail exchange, you're going to walk away with more sats per purchase when you compare us to some of the bigger exchanges, which have large spreads or price premiums. And then most people aren't aware of this, but the price that you see on the screen is not the execution price you receive. So that's called slippage. And then you might think you're buying at 130,000, that by the time you complete your order, you're at 131,000 because there's not enough liquidity at that time, at that price. And so for us, when you factor in things like price premiums, markups, spreads, and slippage, we come out ahead. So really, it's old world service meets fair value, and you walk away with a lot of Bitcoin per purchase with Stormrake, whether you're spending $2,000, $10,000, or $1 million. And so that way people can come in, know that they're going to get a localized premium service that is personalized to them. And then number two, you're also getting the fact that you're walking away with more Bitcoin per purchase. So that's really been our secret sauce. And I'm happy to disclose it publicly, because try as our competitors might, can't replicate it, because it's the Stormrake formula. Because you can, otherwise sometimes people can give you really good prices, but absolutely no service. And then other locations might give you excellent service, but you're paying an exorbitant premium for that. We find we're somewhere in the middle, where you get excellent service and you're getting fair dinkum prices for your Bitcoin. So that's what makes us, I guess, a little bit different.
And the thing I love about you guys too, Bish, is you've got transparency with your pricing, right?
Yeah.
Whereas you go to, flat 2%, and some people might go, oh, that sounds expensive. My exchange is going to charge me 0.5%, but they don't realize when you go and you actually work out the price and look at the premium or the slippage or the spread, you start to realize, well, some of these spreads up over and above market price can be up to 5, 8, 10%. Is that right?
When the volatility blows out, yeah, for sure, it could get quite high. Generally speaking, the average spread or price markup across the Aussie exchanges is between 1.75% to 2.25%. So that's the cost of the actual spread. And then you factor in your execution fee, which might be 0.5. So most people are spending, on average, now of course it can become a lot higher during periods of volatility, but on average, people are paying between 2.25% and 2.75% in costs and spread when they're executing their transaction on an exchange. And that's okay. That's just a different revenue model. It's not a criticism. It's just, that's the true cost.
Yeah.
You can work it out for yourself. You don't have to take my word for it. And then you come to us, you get the absolute market price, the absolute best spot price available at that time of the request. And then we charge a 2% transaction fee. So then what I encourage my investors to look at is, don't worry about the execution fee, right? Because sometimes people try to haggle me with it, and I'm like, I'm not negotiating. Look at how much Bitcoin you walk away with compared to me and against the exchange that you're comparing us against.
Yeah, which is ultimately all that matters.
Exactly.
People
You're coming to me.
People focus on the wrong things, and I
Correct.
say it's crazy. It's just a human psychology thing. But yeah, focus on what you're actually going to end up with in your Bitcoin bag, and that's really where the comparison is. But more importantly, what I really love too is the fact that if there's any challenges, like you said earlier, you can just jump on the phone and talk to yourself or one of your brokers, one of your team. And if there's any concerns, roadblocks, trouble with your bank, whatever it might be, you can just talk through it, get a little bit of coaching around it. And you just don't get that type of service dealing with an exchange. I mean, you'll have to put in a note into a chat box and wait for an email reply and all of that. But, you know, when you're trying to just get on with your day, it's very, very frustrating if there's a roadblock when all you're trying to do is just to put a few $1,000s, or it could be 10,000 or 100,000 or $1,000,000. You know, some people are deploying really significantly into this and they just want it done in the most seamless and frictionless way possible because they're making a big decision. And the last thing they need is to be told that, you know, you're not allowed to do that with your own money. Why
Correct.
is it, Bish, that you guys have made some changes with your payment rails in terms of, you know, I think you were among the big four banks and now you've moved outside that. Can you just share
Yeah.
with the audience how that's helped and the reasons you guys did that?
Yeah, I mean, there's no secret about it. The Australian cryptocurrency and Bitcoin industry has been actively getting debanked by the big four and other regional banks over the last 5 years. So we've gone, and this has affected me personally and some of my business partners personally, where it has nothing to do with the Stormrake business. They've come and attacked us directly and said, we're kicking you off and you can't have a bank account with us. It's affected us as well. But we're happy to fight the good fight. So over the last 5 years, almost every single digital asset broker and exchange in this country has received letters from banks at some stage in their history saying we're no longer wishing to serve you. Please move the funds off platform and we wish you all the best, right? And there's no recourse. There's no explanation of who we are, what we do. We're an AUSTRAC registered brokerage. We're applying for what is known as an Australian Financial Services License, specifically for the ability to deal in cryptocurrencies and Bitcoin, which is really welcoming for us because up until 2026, there was no regulatory framework for digital asset brokers like us, where we could say, let's apply towards a digital asset broking license. Because my background is from foreign exchange and CFDs. When you are applying for that, it's a derivatives license. So it's really easy to be regulated, get banking services, get insurance services, and to have that regulatory oversight, which then gives the banks and the insurance companies nothing to really worry about because you're a regulated provider. So the last 5 years, we've been an unregulated asset class, which has allowed some cowboys to come into the space, but they mostly operate from offshore, this is the part that really hurts, Zane, is that a Aussie bank is more willing to do an international wire transfer to a fraudulent scam organization overseas because at least it washes their hands of any sort of kickback that may happen, or they end up withdrawing the cash and then shipping it off to another bank and sending it to the scammer overseas. And, you know, they're happy to do that because their systems haven't caught onto it, but they'll flag a genuine Aussie business here in Australia who's using a payment services provider, which is what we're using now, which is the ability for our clients to send us funds. We use what is known as a payment services provider, which is all based here in Australia. And then they say that, oh, we're not going to transfer the funds because it is a payment services provider, which is a really big slap in the face because I went and had banking services, which you have taken away and said that we can't take on anymore. We assume that this will change when we become a regulated asset class. So regulation is coming for digital assets one way or another. What America has done is a very similar model to what Australia is doing now, which is a big part of my pain with this country. As much as I love Australia and as much as I love my people, God, man, like we only wait until the Americans do something and then we copy exactly what they're doing. So in America, digital assets and Bitcoin are regulated assets. You can get licensing to deal in digital assets, and this came under the Trump administration. So then Australia felt like it's safe and it's okay to now be able to provide digital asset regulation. We weren't going to do it first because that would require actually having the stones to do something avant-garde and novel and
Proactive.
and entrepreneurial, which we wouldn't ever do. So that's okay. We got there in the end. And so really what it comes down to is that banking services for digital asset service providers such as ourselves are really hard to come by. So we have to use what is known as a payment services provider, which is a layer that sits on top of the bank. So the bank provides access to the payment services provider for normal bank accounts, and then they provide that to us, and we pay a premium for that service that our investors and our clients don't have to pay for. So we pay quite a substantial amount for these premium access rails, which allows our investors to safely deposit to us, and that cost is not borne by the investor. They don't pay deposit fees, right? They don't
Mm.
pay withdrawal fees. They're only paying for the trade service that we provide at the best market price. So that's really important to denote as well, because, last year in June, July, we got the letter that said we no longer want to do business with you and we're no longer going to be banking you from one of the big four that we were using at the time. Our banking costs went from the $4 a month account fee to tens of $1,000s in just banking costs, but none of that is borne by our investors as a cost. We never
Right.
pass on those costs of doing business to our clients. We've always been very
Mm.
consistent with our pricing, which we've been at 2% for years now. And so we're very competitive for our investors. And even when our banking costs went through the roof and went parabolic, I'm not going to just start on charging that to my investors and to my clients. So whilst the banks make it difficult to do business here, whether it be sending, receiving, or even just getting access to basic services, my assumption is that when the licensing regime here in Australia changes and catches up to be where the rest of the developed world is, then banking services will come online and be more accessible for your average Aussie investor. But at that point, the Bitcoin price will most likely run away from where we are now, because if it's easy, everybody will be doing it. And if everybody's doing it, you're too late to the trade. And when you're late to the trade, the price has already ran.
Yeah.
So I'm encouraging my investors to persevere and deal with the difficulty now. Don't wait to buy Bitcoin and wait. Don't wait is what I'm saying here.
Until the
Definitely
masses are here.
yeah, have a strategy. I'm not saying just, rush and FOMO buy and don't do it. Like, have a strategy. We could dollar cost average. We can limit orders. We can have a series of market orders every month. There's definitely a strategy. I'm not saying just be, flippant in how you purchase. But what I'm saying is don't wait for the rest of the crowd to follow. Don't wait until CBA, ANZ, Westpac, and NAB tell you, yeah, it's okay to invest in crypto. Don't wait until it's Albo gives you the green light. Don't wait until your mum or your dad is telling you, yeah, I bought some more Bitcoin. It's too late at that stage.
Yeah.
Not to say that the opportunity isn't going to be present. It might go from having a 40 to 50% compound average annual growth rate to something around 10, 15%, which is more in line with what the stock market provides. But that might take 10 years to get to that point. My essence is that if the difficulty that comes with dealing with Australian banks now should embolden and empower you to understand you're going in the right direction. Because you can spend tens of thousands of dollars on Sportsbet, BWS, and at the Thirsty Camel, and they won't have any problem with you doing that, right? No problems at all. You can put a cheeky halftime punt
It's
on
crazy.
any of the footy matches on live betting, and you can transfer a few
No,
$1,000s, no problems. Whereas if you choose to invest in yourself and use a savings technology like Bitcoin to prevent the loss of your capital through inflation, then they'll stop you from doing so. So that should empower you to know that you're heading in the right direction.
yeah, that's really great advice, Bish. Now, just a couple more minutes, Bish, if you don't mind, and then we'll wrap today's conversation. I've really enjoyed this, and I hope the viewers have got tremendous value from your insight. Bish, where do you see things going in 2026? I think you kind of touched on it at the start, but what's your prediction as to where Bitcoin could be come December? Do you think we've got this kind of uncertain environment going to kind of dovetail into some serious tailwinds over the next couple of months? How do you think it's going to be with Trump going into the midterms? Do you think that all this augurs well for Bitcoin towards the end of this year? And how should that impact people's decision making right now?
Yeah, I think that the first 6 months of this year, there's going to be some serious volatility, both to the upside and the downside. We're going to
Mm.
catch a lot of late bears offside. So people who are coming to the party now trying to short Bitcoin, and they're just adding fuel to the fire as we mean revert and fly back to 110K. Then we're going to see a lot of people who thought that they had missed out on the Bitcoin party join into the 100K going long and strong before we retest some of the prices that we're seeing today. And then I'm assuming a much stronger second half of the year when the market, so there's things, for example, in America, like the crypto market structure bill that'll be passed within the Q1. We talked about the refinancing cliff. We talked about the US fiscal deficit spending increasing significantly. So all of these things take time to work through the financial markets and then make its way to Bitcoin, because Bitcoin is what is deemed as a risk-on asset, so that it takes time for the capital to get there. But when it does get there, because it's such a small asset on a global scale, we talked about 0.2% of global capital being in Bitcoin, the repricing is significant. So we could, for example, when it was November 2024, Bitcoin was trading at around $60,000, right? Just before Trump came in. By the end of November, it was trading close to $100,000. So went up 10K a week for 4 weeks straight. People forget that because we're short-sighted and we've got memories like goldfish. We've got the TikTok brain, as I like to call it. But we moved on. But we could genuinely see Bitcoin go from $100,000 to $200,000 within a 6-month period and go up pretty much 10 to 15K a month and catch a lot of people offside. A lot of people offside. Silver had a very similar move in 2025 where it went from $50 to $80 within the span of a month. So you can never put a lid on scarce assets when demand comes through. So demand will wax and wane based off the seasons. Sometimes people want gold, sometimes people want silver, sometimes people want Bitcoin. Then the new shiny AI stock comes around. Cannabis stocks was popular back in the day. So there's a lot of things that will capture people's attention. But what happens if you have a structurally scarce and finite asset such as Bitcoin? When it's met with this rush of demand, the price goes vertical. So that's what I'm expecting, is that the supply is known. We know how much Bitcoin is available at any one time. Anybody can see that it's an open and permissionless network. And when the demand rushes in, when capital and liquidity wants to be treated best, it'll make its way to Bitcoin. And that's when you see those violent repricing, when you just see it move 10K in a week. And that's where, even in, we're talking about each bull run here, but even when I was coming into the space, I was dealing in 2020 and 2021 as a Bitcoin broker. Bitcoin went from $10,000 to $60,000 within 4 months in that period of time. And I did a little bit of analysis for you guys, and this is something I'll leave you with before we wrap up the show. Its returns, 90% of its returns in any given year comes from its 10 best trading days. Those 10 days aren't cumulative. They're not like it goes back to back to back, but it's 90% of the returns come from the 10 best trading days in a year. If you weren't invested for those 10 trading days, you're going to underperform Bitcoin on an annual basis. So that's why it's so important to not try to buy, sell, buy, sell, buy, sell. Whilst it's good for me, I get another Porsche, I get another Ferrari because I'm having people as my clients trading, and I'm collecting fees all day. But I'd much rather you guys keep that wealth and not give it to myself and just pay me an honest 2% for your investment allocations. And you can sell when you need to, but just don't sell irrationally and emotionally is what I'm saying. But the point I'm really highlighting here is that if you're not invested for those 10 days, you miss out on 90% of the Bitcoin potential upside, right? And I don't know when those 10 days are going to come, right? I can hazard a guess, I could get it wrong, and then bang, there's one less day where I can get the best returns in the market. So that's why it's important to stay invested in Bitcoin, because you get those 10 days where it moves 10%, 11%, 15% in a day, and then you leave it as your stack and it compounds. Those are the days that really matter. So you get 6 months of chop to get 10 days of great returns. That compounds every year for 10 years. That's how you make your money. So that's why it's hard for most folk to really stay into the trade, because, and this is not unique to Bitcoin, mind you, it's a lot higher in Bitcoin, but if you weren't invested for the 10 best trading days in the S&P 500, which is the world's largest stock market index, you miss out on 70% of the gains, right? So
So it's a similar thing, yeah.
it's a very similar thing,
Yeah.
right? Your gains are made in very concentrated times in the market, and it's almost impossible to pick those days. So
Mm.
for people who are in the market for a year, 2 years, 3 years, and are trying to trade throughout the year, if you miss one of those days or two of those days, you've genuinely potentially given up majority of your upside or a good chunk of it at least. So if you're trading in and out and you miss one of those moves, then you've missed 10% of your potential annual returns. So it's really important to just focus on buying Bitcoin, being patient, stacking it in cold storage, because that return profile and that statistic is not meant to be alarming. It's meant to be convincing and assuring that if you stay consistent and you're armed with good knowledge, you'll be able to deliver yourself really good returns, because you just have to wait for those 10 days to come to deliver you those 90% of those returns. Just be patient with the 6 months of chop and you'll be fine.
Yeah, and I think a strategy that is really zoomed out, Bish, and long term, just focused on being future focused, having a bit of a plan, and just not paying attention to the charts, right? I think that can really save you a lot of stress and anxiety. And so, I think that that's why I spend a lot of time really encouraging people to think more long term with Bitcoin. And I guess what you shared there with 90% of the returns coming from the 10 best trading days, and we have no idea when those 10 best days are. It's best for us just to keep chipping away at it and just focusing on where this is going. As Wayne Gretzky, the great hockey player, used to say, go to where the puck is going, not where the puck is. Anticipate where this is going. And we know that with Bitcoin, we're still at what, 5% adoption, not even that globally. All the biggest pools of capital are telegraphing what they're going to do with this asset. We know it's fixed. We know it's finite. And, I often refer to it as a life raft. And if you're getting off a debt-based sinking financial Titanic, which is what the fiat system is and the debt-based system is, and you're jumping onto this little life raft out in the ocean where the seas are a little choppy, you know that you're going to be in for a little bit of a wild ride. So you just need to hold on for dear life, hodl, as we say in Bitcoin, and just look towards the future and just keep stacking. Bish, I really want to thank you for your time. Is there any last words of wisdom you want to leave with the audience before we move on? Maybe how they can connect with you. If anybody wants to open an account with Stormrake, you'll see a link in the show notes below to do that. If anybody wants to have a conversation with you or one of your team, what's the best way to go about that?
Yeah, just email us to trade@stormrake.com or call the office. We can call us 7 days a week, 365 days a year. The number's on the website, so you can give us a ring. You can schedule a consultation. So if you go to stormrake.com and make your way to the contact page, you can book in a consultation with myself or one of my brokers to have a chat about your potential strategy and how you wish to invest in the market. It's completely complimentary, so you don't have to pay us anything for that. Just make mention that you came to us from Zane, so that way we can make sure we roll out the red carpet VIP experience that he's come to know for. Because otherwise, I'm going to have to give you guys the blue carpet experience, which is not as good. But in general terms, you can consult with us, have a chat, completely complimentary. Call us on the web, with the number on the website, or you can email us at trade@stormrake.com. And I always make an effort to be available. Another good way of going through it is book yourself a chat and have a consultation with Zane, because he then connects you with me. He connects you with the SMSF specialist. He connects you with a range of services to take care of your Bitcoin journey. And myself and my team come as a part of that package. So there's many ways to get to us, whether it's through Zane, through a consultation, which he'll connect you with a range of other services, or you can come to our website, which is stormrake.com, and then be able to call us, email us, or book a chat.
Awesome stuff, Bish. Thank you so much, mate, for being here and for sharing your insight. I think we're in for a really interesting year ahead. Hopefully you, the listener, got tremendous value from listening to Bisher. For those of you who don't know, their office is actually in Melbourne. So just keep that in mind. They're a local Australian business. But I want to thank you for being here. Hope you got tremendous value from today's episode. If you want to support the work that I'm doing, support the show, and help me to continue to attract world-class guests such as Bish and others to help you on your Bitcoin journey, one of the easiest things for you to do is to share the content, leave a comment, like, share, and most importantly, to subscribe to the channel to help me grow the channel. That would be much appreciated. You've been watching Bitcoin with ZT, where real conversations meet real conviction. We'll see you in the next one.